Elite Credit Services, and Your Credit Scores Explained. People are not a number, but we certainly are labeled with one. Your credit score will tell you whether you can rent or whether you can buy. A low credit score can also prevent you from getting a job. And bad credit after a divorce can last much longer than the marriage. Bad credit can cost you thousands. Because of your credit score, just a small difference in your mortgage rate can cost you an additional $100,000 over the life of the loan for an average $150,000 home. And if you include your car payment and interest, your car insurance, and your home insurance, sometimes your bad credit can cost you up to $300,000 more than someone with good credit over the course of 30 years. So how much does bad credit cost me anyway? Bankruptcies and foreclosures and judgments usually cost you over 100 points. If you're in a debt settlement or credit consolidation program, sometimes 45 to 65 points. And 30-day recent late payments can be as much as 60 to 80 points. Pay everything on time, every time, and avoid 30-day late payments at all costs. A maxed out credit card, with your credit utilization being high, can often cost you 10 to 30 points. Who are the credit bureaus anyway? Well, let me tell you what they're not. They are not government institutions, and they are for-profit, very big profit, private companies in business to track, collect, record, and sell your information on every single person with a Social Security number. Experian, TransUnion, and Equifax are the three major credit bureaus, and they have recorded every dollar you have ever borrowed and how you paid it back. They track every move you've made, recording each new address and also every employer that you've had. They also keep track of every time you've ever asked or applied for credit. What is a credit score? It's the formula that predicts the chance of a consumer becoming 90 days late on a particular loan obligation over the next 24 months. And that score is generated by analyzing the information contained in your credit report at that point in time when the credit report is pulled. There are a lot of FICO credit score facts and a lot of myths. So can you tell which ones are true or false? Some people think that closing their unused old credit cards will improve their score. That generally is false. And your credit score will probably be different with all of the three credit bureaus. When you get married, your credit report is not automatically merged, and your credit accounts are not automatically merged with your spouse's. Checking your own credit score will not lower your credit score. And your income is never a part of your FICO credit score. We often have a lot more myths and mistakes. Some people think that paying off a collection will improve the score. That's generally not true as well. Filing bankruptcy or using credit counseling will improve the credit score. No, that's another false. Closing older credit cards is okay? Not usually. Shopping for credit to get the best interest rates doesn't hurt anything. While you do have a specific time to shop for mortgage rates, we do not suggest that you get your credit pulled in a lot of places over a long period of time because it will drop the score. It's best not to use credit card at all. Well, if you never need a home, a car, or insurance, or even apply for a job, then you don't need credit. But most of us in this world need good credit. Bad credit can be offset by applying for good credit. That's just simply not true. And bad credit must stay on your credit report for 7 years, so why even bother? We actually get items removed from credit reports much sooner than the 7-year mark all of the time. The credit bureaus are a part of the government. Also not true, they're private companies. Tax liens, judgments, and bankruptcies cannot be removed. We get those items removed all the time. The Fair Credit Reporting Act states that if anything is either inaccurate, incomplete, or unverifiable, it has to be removed by law. You don't think bad credit scores affect you? They probably do, even if you may not realize it. Your credit score is made up of 5 components. 35% is your credit history and how you pay your bills on time. 30% are your debt ratios and credit utilization. Are you maxed out on your credit cards? 15% is the average age of your file and your length of your credit history. 10% is the mix of credit. Lenders like to see a mix of revolving credit like credit cards and installment loans for the best score results. And 10% are your credit inquiries. How often do you ask for credit? So how can you improve your score? The habits of good credit are making all payments on time and every time, and keep those revolving credit card balances to 30% or below. If you have anything that's inaccurate or complete on your credit report, use the Fair Credit Reporting Act to get it removed so your score improves. The only website that's monitored by the FTC where you will not be charged for a copy of your credit report is annualcreditreport.com. And you're allowed to 1 free copy of your credit report per bureau every 12 months. The credit restoration process. So how does credit repair work? The consumer protection laws defend us from incorrect reporting from the credit bureaus. The Fair Credit Reporting Act, the Fair Credit Billing Act, and the Fair Debt Collection Practices Act are all used for credit repair to improve your credit score. Disputing credit errors and inaccuracies is how we improve your credit score. We can request that the item be investigated, then demand proof of the investigation procedures, and also request debt validation and verification on the account. If the account is incorrect, incomplete, or unverifiable, that account is removed with the credit bureaus and your credit score improves. This requires persistent follow-up and great knowledge of all of the laws available to the consumer and also to credit repair agencies. We want you to get your new credit score and keep it for life. Elite Credit Services, repairing credit, improving lives.